Good morning, good morning, good morning, good afternoon, good evening, depending upon where you guys are. Thank you guys so much for joining us. As always, here at TradeDelicious, we're super excited to get the ball rolling and see a couple things that are going on in the markets. Today, my focus is going to be really all about the pound sterling. Um, there's been a really unique collection of things that's been happening in Great Britain, and I want to take a look at it, especially because we have an interest rate decision coming out of the Bank of England today. So let's take a look. So, the Bank of England, the situation with England is a little bit more complicated than other conditions. There were a lot of things at play as to why they've been experiencing so many issues with inflation. You have to remember that the Bank of England and the whole of the country of Great Britain, of the United Kingdom, only was having discussions about Brexit prior to 2020. January 31st, 2020 is when England truly broke off from the European Union. Obviously, the pandemic happened 2 months after that, and we started seeing some significant issues in the United Kingdom, as we saw in countries across the globe. However, unlike these other countries, the United Kingdom had to deal with added pressures from leaving the European Union. Those stresses added immense pressure to the economy as a whole, leading to a collection of issues. As we spoke about several times on this channel, the current inflation rate is about 8.7%, and this is the CPI figure. To be frank, they've missed on their forecast 4 months in a row in Great Britain. This is of significance just by virtue of the fact that we're trying to, as all central banks are, attack inflation with immense aggression. So to see that the forecast is continually leading higher has led some economists to believe that the Bank of England will make a move to raise interest rates by a half interest point as opposed to just a quarter. Of course, the current bank rate is 4.5%, very similar to what we're seeing in the European Central Bank, but we may see that jump all the way to 5. Either way, this would be the 13th rate hike in a row. This would put us in a situation where Britain's had the highest interest rates that they've had since 2001. Um, it's, again, something of immense significance. Much like the United States, there is a separate body that handles this. There's a Treasury Department as well as a Federal Reserve. They don't have Federal Reserve in the same capacity. The Bank of England has the Monetary Policy Committee, which is headed by the governor, who is actually appointed by their head of the Treasury. So it is a very similar situation than it is here in the States, but unfortunately they just haven't been able to get this inflation situation under control. Forgive me guys, I need to make sure I have the chat open here. Unfortunately, we just went down for a second. Just a moment here, and I'll be able to get that up and we'll be able to continue. But the core of the issues, as always, are really centered around the inflation issues. So I wanted to open up a quick summary of the morning minutes from the most recent Monetary Policy Committee meeting. Obviously, their goal is to hit 2% inflation. That's every bank across the globe from a central perspective is trying to get to this 2% point, and it's been an immense struggle. Their projections for activity and inflation have simply been off, and they've been off continually. You have to remember too that there are a variety of conditions that need to be met in order for inflation to fall. Just like here in the States, we need to see less demand. That's the whole point for raising interest rates, right? However, like here in the States, the UK has had incredible resilience in the labor market, which should be a great thing. People have jobs. That's great. The inflation, the unemployment rate is hovering just below 4%, which is something you would expect out of a very strong economy. However, in order to make sure inflation is handled properly, that unemployment rate unfortunately needs to go up. Not only does that unemployment rate need to go up, but we need to continually see wages fall, as there's so much demand in England for so many people in so many specific job opportunities. We simply haven't seen that. Wage growth has been happening very quickly in the Bank of England, and that's making things a lot more resilient from the perspective of the Bank of England. Again, I say all of these things and not very excited because I mean we're talking about people's jobs. Technically, as traders, we need to be looking at these things through a lens that is very statistical. We're looking at numbers. I hate to forget the people in the situation, so forgive me if I'm a little resilient to talk about the resilience of the labor market. As we spoke about before, CPI inflation was at 10.2% in the first quarter of this year, which is absolutely ugly. We're supposed to see things fall a little bit quicker than what we've seen. Us chilling at 8.7% is really, really, really concerning. Um, there were a couple other things that I wanted to discuss really quickly in terms of the 12-month, the 2%. Again, the unemployment rate, as I was saying before, is at 3.8% versus the projections that we were supposed to see around 4.1. Someone was asking in the chat, today is also the Fed Powell testimony. Yes, here in the States, for the Federal Reserve head, the Federal Reserve chairman, the king of all things monetary policy here in the States. Yes, he's having a bit more testimony today. Chances are he's going to come out a little bit more dovish, as he always does. But as of late, he's been letting his foot off the gas by virtue of the fact that he's still trying to figure out whether or not the rate hike decisions are going to affect the economy long term. And we're seeing something very similar happen across the globe. You have to remember that, as Jordan has said on this podcast, if I have said on this podcast, rate hike decisions usually don't hit the market for months, maybe even a year. So the fact that we've seen so many continuous rate hikes from all major banks, not just the Federal Reserve, but the Bank of England as well as the European Central Bank, the RBA out in Australia, this means that we don't really know where inflation truly sits, as the economy has not yet responded to all of the rate hikes. So these resiliency issues that we have continually seen, we are sitting on our hands waiting to see whether or not these rate hikes are effective. Here in the States, they've been considerably more effective than they were in England. Our CPI data is hitting inflation at half of what England's experiencing. So the Federal Reserve has the luxury of being able to sit back. The Bank of England simply does not have that same luxury. But the biggest things to understand are the things that we've really gone over. There are a collection of other things that are important as well. You have to remember that their relationship with the European Union being cut so abruptly through Brexit. I know it doesn't seem like it was abrupt, we were talking about it for years, but it felt very abrupt, especially as the pressures from the pandemic mixed with some of the issues that we saw in Great Britain. It's really difficult to determine whether or not the pandemic had more of an effect or Brexit had more of an effect. But the fact of the matter is, Britain found it very difficult to import a lot of things from the European Union, a lot of food, a lot of oil, a lot of gas, hence some of the energy concerns that we've seen over the past couple of years. There's been a lot of issues in terms of red tape for businesses in Britain for them to do business with a collection of other organizations, groups, businesses throughout the European Union. Obviously, that would cause significant pressures within the country. So it was the perfect storm for economic growth to fall in Britain. especially as they were dealing with so many problems with Boris Johnson, the former prime minister in Britain, who was just ousted within the past 12 months. Let's face it, guys, in the past 12 months in Britain, we've seen three different prime ministers. This isn't the Great Britain that we're accustomed to seeing. The current prime minister is very interested, of course, in keeping the pound sterling as strong as possible, but the fact of the matter is so much of that is entirely out of his hands. Let's take a look at the chart here, just so we continually have a conversation. Obviously, the pound sterling has gained strength against the US dollar, and there's expectations that it will continue to do so as long as the Bank of England is able to raise rates. Now, if we continually see data pop out where CPI is much stronger than we forecasted, if we see data coming out that the unemployment rate gets better and better, maybe next time we look at unemployment, instead of 3.8%, we're looking at 3.5, we're looking at 3.3, then we may see this chart turn around. We're seeing highs here that are pretty impressive. We haven't been in this area since April of this year. The next area that we'd be looking at would be highs towards the beginning of the year. So the fact that this guy is recovering with the speed that it is something of interest for me as a swing trader who looks at long-term opportunities. I'm interested in the weakness in the sterling. I am interested in the possibility that we'll see a reversal sometime here soon. It's just difficult to say with all the complexities that we're seeing in Britain. Of course, today's rate decision is going to have a very big bearing on what we're seeing. A tool that I use in order to follow everything that's happening from an economic calendar perspective is investing.com. I would really encourage you guys to go ahead and take a look. But we're seeing this data pop out, making the interest rate decision right at 7 in the morning. So I would be very conscious of this time frame here. All of these data points that you're seeing are really pulled from Eastern Standard Time. So today at 7, we'll see the Bank of England's votes, whether we see a hike or a cut. Haha. Obviously, we're going to see a hike. It's just a matter of how much. We'll see the interest rate decision, and we'll also get the morning minutes from the Monetary Policy Committee. We'll, of course, get the Bank of England inflation letter, and this data will be incredibly pertinent on the strength of the Great British Pound. So if you're still trading in a couple of hours, please be incredibly aware of this data that's coming out. It's going to be a stressful situation for the Great British Pound. And if you're in a trade at 7, if you're in a trade at 8, you're going to want to be a little cautious because the volatility in these markets relating to the pound sterling are going to be a little wild. Now, of course, we also are going to see the Federal Reserve Chair Powell talk at 10 a.m. So I'd be very cautious about any trades that are happening around that time as well. Usually what Powell does is he's a veteran, right? He's not going to say anything that we haven't already heard for the most part. But every once in a while he gets a question out of left field, and that causes him to slip up, leading to additional stresses in the US dollar and products relating to it. The volume is bad. I'm so sorry. Let's see if I can move the mic around. This should be a little bit better. Sweep of sell for a Great British Pound dollar. Buy side liquidity are going to be what's expected for retracement for buy side imbalance. Super possible. I mean, the fact of the matter is, this thing has been pushing really aggressively for quite some time. So we really could see a very strong retracement here. But that's the issue. We could see a retracement here. I always suggest that traders be as cautious as possible, and we really balance our expectations with what we're expecting. The fact of the matter is, these markets have been incredibly resilient. These markets have been incredibly strong, and the pound sterling, despite all of its issues, has performed quite well relative to a basket of the other currencies. So I'd always be very, very cautious. Thank you for letting me know about the volume. I'm so sorry about that. Beautiful. That's really all I have for you guys on the Great British Pound. Just a couple things to keep in mind. Please be cautious over the next hour 45. If anyone has any questions, I'll stay for a couple more minutes. I'd love to answer. But if not, that's really the core of what I want to talk to you guys about today. Again, I'll stay around for a couple minutes, so I'll expand just a hair. But outside of that, we'll skedaddle. As we talked about before, there's a issue for the Great British Pound about their interest rates, and a lot of people are expecting just a quarter point hike, like the Federal Reserve, like the ECB, like most central banks. Most banks have been acting on just quarter point hikes, as you can see here. But we did see a couple of raises, a couple of hikes that were half point hikes. In fact, we saw as high as half point hikes for quite some time, actually. This is really impressive. Seeing a half point hike as early as September, then also in November, we saw a three-quarter point hike. Jesus. We saw another hike of half a point in December as well as January. With the fact that so many numbers have been missed from an inflation perspective, there is a 45% chance. There's a couple of indicators for this, but there are enough economists that believe that there's going to be a half point hike, which would really shake the market, that would really make the pound sterling move towards the upside. If a half point hike hit, there's of course more of a leaning towards a quarter, but there are a couple of economists at Goldman Sachs and JP Morgan that really believe this thing is going to be kicked up to 5.25. Just like the Federal Reserve, there are several voting members on the Monetary Policy Committee, including the governor, who is the equivalent of the Federal Reserve chairman. There are 9 members in total, and most respectable economists believe that at least 3 of these voting members are going to vote for a half point jump. It's going to be something to really pay attention to. As always, we'd like to thank you guys so much for joining us here at TradeDelicious. Thank you for this little special on the Great Pound Sterling, Great British Pound Sterling. I really appreciate your time. I really appreciate your guys' participation. If you have any questions, comments, concerns, please let me know in the chat what you guys think. If you like what you're hearing, please like, subscribe, throw your notification bell on. We're here every day, Monday through Thursday, to give you guys content on things that are happening in the markets, how to improve your trading, how to improve your knowledge of the economic conditions surrounding the products that we trade, so on and so forth. This is the last day we'll be with you. I'll miss you guys over the weekend. So please, for today, for tomorrow, as always, trade well and trade delicious.